Okay. Good morning, everyone. So last class we had done admission of partner, and we will continue and we'll do few more problems of institute study material. Day one, I said institute study material. During my lecture, I said institute study material. Today also I am saying institute study material. There is no point reproducing this book and giving it to you. Past papers, institute study material, revision test papers, that's enough. Right? Chalo. Following is the balance sheet of Ram and Mohan, who is to share in the ratio of 3:2. And you can see that they have given the new profit sharing ratio also. Right? Okay. So, we are doing admission. Institute study material. Right? We are doing illustration 1. So step 1, NPSR. NPSR is 532. Okay. NPSR is 532. Step 2, revaluation account. Here I will show profit. Here I will show loss. Asset increase, liability decrease. Asset decrease, liability increase, right? Now they have told us, this is the balance sheet you can see. He's bringing in 25,000 as capital and 10,000 as his share. So 10,000 is not the value of goodwill. 10,000 is the share of new partner for 1/5. It means the full value of goodwill is 50,000. Right? 25,000 is bringing as capital and 10,000 he is bringing as goodwill share. His share. Right? Okay. The new profit sharing ratio is given. Revaluation is as follows. Building 25, plant and machinery 12, inventory 12, trade receivable 9,500. So building value is 25. Building is already at 18,000. So 7,000 increase in the value of building. Plant is 15. They are telling to bring it down to 12. All new. So difference is the change. If they give new value, difference is the change. If they say buy, increase buy, means buy is the change. If they say it means difference will be the change. If they say buy, then that is the change, right? So 18, I have to make 25. The new value is 25. So increase by 7. Plant and machinery 12. The new value is 12. So from 15 to 12, 3,000 loss. Inventory 12, the new value is 12. No difference. Receivable 10. Trade receivable is 10. And the new value is 9,500. That becomes a goodwill debt. It means 500 I have to create provision. Right? And those are So liability will increase, right? So if I go by revaluation, 7,000 is building increase, profit. 3,000 is asset loss, asset decrease. Inventory value is same. 500 is provision for doubtful debt, and 1,500 is liability increase. New liability. Is it fine? Ultimately, I can see 2,000 profit. This will be transferred to partner's capital account. What this is? This is revaluation profit in OPSR. Yes or no? This is revaluation profit in old profit sharing ratio. As of now, it was the old partner. So this profit, it will be old partners, right? My voice is clear, Tit? Can I see one thumbs up? Jyoti, the voice is clear? That's cool. Right? Step 3 we don't have because we don't have unallocated general reserve in balance sheet. Now we will have treatment of goodwill. First of all, I will calculate sacrificing ratio. That is OPSR minus NPSR. Ram and Mohan. Right? Previously they used to share 3/5, 2/5. Now 5/3/2. So it will go like this. Ram, it is 3/5 minus 5/10. Right? See how much is Shyam's share? Shyam's share is 2/10. So if I add these two, it is coming to 2/10. So sacrificing ratio is 1:1. Right? Okay. Journal entry. Cash account debit to Shyam's capital. 25,000 he is getting capital and 10,000 he is getting for goodwill. 35, 35. In question it is clearly written how much he is getting. Done. Now out of this 35, 10,000 will be distributed between Ram and Mohan. Shyam's capital debit 10,000. to Ram's capital to Mohan's capital. Equally. Sacrificing is done equally. Being Shyam's goodwill compensation is shared by Ram and Mohan in SR, sacrificing ratio. Is it fine? Step 4. Partners capital account. Ram, Mohan, Shyam. Ram, Mohan, Shyam. Ram, Mohan, Shyam. Ram, Mohan, Shyam. By balance brought down. Right? Ram's capital is 25 and Shyam's capital is, Ram's capital is 20 and Shyam is 25. This is 20 and this is 25. Right? Now. First we have by revaluation. $2,000 in old ratio. That is 1200, 800. Done. The profit is 2,000, it will be distributed. He got 35,000 as capital. Right? And then the content from Shyam, 2,000 will go. 5,000 each will come in Ram and Mohan. Contra entry. So here it will be by Shyam's capital and here it will be to Ram's and Mohan's capital. Done. Two balance carried down. 26,200. 30,800. 25,000. right? See, 26, 3,800, 25,000. This liability was 15,000, which will increase by 1,500. This will become 25, this will become 12, this is 12, this is 10,000 minus 500, that is 9,500, and bank will be 40,000. There will be 35,000 addition in bank. 35,000 addition in bank. See, bank is 40,000, right? So this part is easily done. Illustration 7. Profit sharing ratio was 3:2. These are balance sheet. They have admitted X. He will bring capital 25,000 and 15,000 premium for Goodwill means compensation. And he is coming for 1/3 share. Right? Okay. Revaluation is given. Clear? They are paid. It means 2 means this is the new value. So from 5,000 is the fall. Inventory. So 10% this is the fall. Furniture fitting 7,000 is the fall. And provision for doubtful debt I have to make 750. Previously there is no provision. So 7 means all of this is loss. This point number B is full loss. Here adjustment. This is nothing but revaluation account. This is nothing but revaluation account. Capital account includes now the will be equal after admission. It means 1/3 is equally. So we have to calculate the new ratio also. Right? Let us start. Step 1, NPSR. X share is 1 by 3. What is remaining share? 1 minus 1 by 3. Equally between A and B. They have told clearly. The ratio share. Earlier 60-40. 3:2 means 60-40. It was not 50-50. But now 50-50. So A's share is how much? Half of 2 by 3. And B's share is how much? Half of 2 by 3. Between them, equal. So now everyone is 1 by 3, 1 by 3, 1 by 3. So NPSR, A is to B is to X, 1 is to 1 is to 1. This is the first step we have to do. Done. Step 2. To planted machinery 5,000. From 20 it will come down to 15. right? 15,000 into 10% is the fall. Plant and machinery from 20, it will reduce to 15. So 5,000 is the fall. Inventory is 15,000, 10% of that, right? $1,000 is the fall. Two provisions for doubtful debt 750. This is revaluation loss in OPSR. How much? Very simple. We have four asset on loss. In each case, the asset is decreasing. In partners capital, it will be two revaluation. Then capital 25 plus 15, he is getting 40. Out of that 15,000 is the goodwill compensation. Treatment goodwill. Treatment of goodwill. For that, we have to calculate SR. OPSR minus NPSR. A. It was 3 by 5 minus 1 by 3. B. Sacrificing ratio is 4:1. Right? So journal entry is cash account debit to X capital. 25,000 is capital, 15,000 is goodwill. So this person is getting 40,000. This person is getting how much? 40,000. But out of that, only 15,000 will be distributed in 4:1 ratio. So excess capital account debit to A's capital account to B's capital account. Yes or no? This is very simple. There's nothing much in it. See what I'm doing right now. I'm just following the process blindly. Doors are open, but the thought process is same. Now, सबको एसेट लायबिलिटी को बढ़ा दो, उसका प्रॉफिट हम लोग शेयर कर लेते हैं नए वाले के आने के पहले. दैट इज व्हाट रिवॉल्यूशन इज डन. जो भी दैट इज व्हाट जर्नलिज्म इज डिस्ट्रीब्यूटेड. In future, compensate for that. That is bringing more. $37.28. Eight to five in 3:2. 2/5 and 3/5 and 2/5. How much? How much? 4950 and 3300. Buy cash he will get 40. But out of this 40, 15,000 is distributed and these two will get. So contra entries from X they are getting, and he is giving to A's and B's capital. Done. That's it. So take the balance. How much? Huh? This is 25,000. 27,700. 40? 44,050. Right? See? 8250, 12,000, 3,000, 15,000. You can see. Right? Sacrificing ratio is 4:1. Everything is given, right? Number 6. Now see, here the balance sheet is not given, right? In illustration 6, you can easily see these are my assets. If you total, it comes to 52,000. And from trade payable, bank OD, this is my liability. If you total, it is coming to 52,000. Right? C is to come for 1/3 share. And for 1/3 share of goodwill, he is giving 2,000. He is getting 2,000. And he will provide 10,000 as capital. It means he is bringing 12,000. Future profit loss they have given. Reduced by, right? Provision for doubtful debt. Inventory's valuation of 24,940. So inventory, the valuation is increasing, see? Right? By withdrawing of bringing the capital of A and B are to be made proportionate to that of C. Whatever is the capital of C, A and B's capital will be in their profit sharing ratio. Since it is equal, see the new profit sharing ratio is equal. So if C's capital is 10,000, then B and A also needs to maintain capital of 10,000 because the ratio is equal. No? We are just on the basis of C. Whatever C is bringing, according to that, we will maintain capital and rest we will withdraw or we will bring. Is it fine? Yes or no? Okay. Now listen to me very carefully. Illustration 6. NPSR. New profit sharing ratio. A, B, C. Equal. Right? One is to one is to one. Plant and machinery by 10%. So the buy means this is the fall. The value of plant and machinery was how much? 4,000. So to plant and machinery account 4,000 into 10%. That comes to 400. Provision for doubtful debts 500. Right? The value 24940 minus 22. How much? 2940. So it will be 2 partners capital account. That is revaluation profit in 3:1. The old ratio is 3:7, 1:7. Yes or no? Right? There is no undistributed reserve. Right. So first of all, we have to calculate OPSR minus NPSR. A 3 by 4 minus 1 by 3. Right? 1 by 4 minus 1 by 3. That is 5 by 12. He was getting 75%. Now he will get 33%. He was getting 25%. Now he will get 33%. It means here B is also getting permanent admission. He is not sacrificing. What was the logic? That the gaining partner will bring compensation for the sacrificing partner? Try to understand. If I do, it is coming to 4 by 12, that is 1/3, which is the share of new partner. If I have sacrifice, right, what is C's share? 1 by 3. What we had done earlier, when we added sacrifice, it was coming share of C. But here some is gaining, some is sacrificing. Anyway, if I add these two, I will get share of C. Yes or no? It means, try to understand. C is bringing 2,000 for 1/3 sharing profit gain. Yes or no? So just I'm asking, how much is the full value? 6,000. Therefore, B is also gaining. So he should also get 6,000 into 1 by 12, 500. Yes or no? But this happens. This is an existing partner. So he what with from my capital. How sacrifice? This is sacrifice. 5 by 12. So it is coming 2,500, but C is getting 2,000. So B will give him 500. Yes or no? So this person will get 2,500. Is it fine? So now what will be the journal entry? Just see. Cash account debit to C's capital. 10,000 for capital and 2,000 for goodwill. So he will bring 12,000. Out of 12,000, he will give how much? 2,000. But A is sacrificing more. So 500 will be given by B's capital because he is also gaining. When calculating sacrificing ratio, if this negative comes, then B will also compensate A. Not only C, but B will also compensate. Because A sacrifices more. Right? Step 4. What is the capital of 15 and 10, right? Revaluation profit is 3:2, right? Sorry, 3:1, old ratio. So 2040 in 3:1. Only A and B will get. This is in old ratio, right? So how much is coming? 1530, 510. Buy cash. He is bringing 12,000. He is bringing 12,000. Now out of 12,000, he will give 2,000 to A by C's capital to A's capital, right? He will get more from that by B's capital to A's capital is already written. We can write amount in B's column, right? Now read this paragraph. Revaluation done, general reserve is not there, goodwill treatment done, partners capital I have prepared. Now, to just see properly, to balance carried down. What is the balance of C's capital? 10,000. So C's capital is how much? 10,000. For how much share? 1/3 share. Therefore, total capital will be 30,000. 10,000 into 3 by 1. If 10,000 is for 1/3 share, how much is total? 30. Now this should be in new PSR. 30 into 1 by 3. It means it has to be 10K, 10K. Done. Now difference, either they will withdraw. Now if they have excess, they will withdraw. And if there is shortage, they will bring. B has excess. And he has 9030 excess. Excess money they withdraw. Done. Now I will prepare balance sheet. I'll just show you the new balance sheet. What is the date? 1st April 2022. Liabilities, assets. A is capital, B is capital, C is capital. 10,000, 10,000, 10,000. 30,000. We have bank OD 15,000. We have trade payable 12,000. So this is coming to 57. Right? Now, plant and machinery, the new value is 3,600. Right? Inventory 24,940. How much is trade receivable? 25,000 minus 500. Right? Cash. 1,000 I already had. 12,000 C has brought. How much? 39. Total is coming. As of now, the payments we have done, in that you saw only the introduction part, but there is withdrawal also. Right? Please do illustration 4. I won't do it. Let's see whether you are able to do it or not. Right? Just practice illustration 4 right now.